It's great.
Hi, everyone, and welcome to The Hash, where we bring you the latest and greatest in crypto and culture. My name is Naomi Brockwell, and today on the show, we have Sanasie, Will Foxley, David Morris. We have Ben Powers. Welcome back, Ben Powers.
Hello.
And I think we also have
back.
Steve the Cat. He may be in cat jail at the moment, but maybe we bring him out later on. But I'm going to jump straight into the
I just barely closed the door, so he could be fighting his way out as we speak. He might show up at any moment.
He could be fighting as we speak. Well, everyone, stay on guard. But we're going to start off by talking about rewards for justice. What is rewards for justice? Well, apparently the US State Department has launched a new initiative where they are paying anonymous informants in cryptocurrency for information on enemy state-backed hackers or suspected terrorists. They've set up this web page. It's called Rewards for Justice. And on the page, it says that they are offering rewards up to $10 million for information leading to the identification or location of any person who, while acting at the direction or under control of a foreign government, participates in malicious cyber activities against US critical infrastructure. Informants who provide credible information apparently will remain anonymous and can elect to receive their compensation in the form of cryptocurrency, which is super interesting. I'm going to throw this straight to the group for your thoughts. Ben, I'm going to just chuck it straight to you. What are your thoughts on all this?
Yeah, I mean, I think it's interesting. I want to know, what cryptocurrency is actually offered.
Oh, no,
he
not
is silent.
fully back. He's
not fully back. He is a muted shadow of his former self. I look forward to his voice returning.
I'll fill in for him.
So I'll dive in. Yeah. All right. Will, you jump in here.
Yeah, no, really interesting report. Also interesting, Tyler Durden. The guy's always on top of it. Always kind of gets the scoops out there. But yeah, there's the program in general that they're offering to pay in crypto is really interesting. To me, this just kind of speaks to the fact that the U.S. government doesn't have the capability of doing it themselves. So now they're hiring it out, even after they sign giant contracts with firms to do this, like Palantir and others. I guess they don't know how to do it. So they have to create these reward systems for it. Also makes me interested in knowing how much Bitcoin and other assets the U.S. government has, because typically when they do seize it, they sell it off. And that's how there's been a bunch of billionaires or millionaires in crypto have been made just through the U.S. government seizing Bitcoin and then selling it later, like Tim Draper. So wondering where they're getting this other stash and who they're buying from. I guess, put the U.S. government down as a Bitcoin hodler.
Is it Bitcoin, though? That's what I was curious about, is what cryptocurrency, they're going to be paying out, or what the options are even. Are they going to be paying out Monero, or is it just Bitcoin? What is this, a buy choice thing? I think this is an interesting idea in the sense of you're trying to meet hackers and other people where they're at already. So in the one sense, that's curious to me. I think it shows some level of self-awareness. On the other hand, we also see the federal government, doing contracting with a variety of blockchain analytics firms. And so I wonder if ultimately, this is the secure and private method for this, but there are ways to trace these things. And so, there is a chance potentially that somebody might be de-anonymizing themselves, even though this is an anonymous thing, if you track the movements of this on chain potentially.
Yeah, and it's interesting that they... Go ahead, Jen.
I'll go super quick. Off the back of what Ben was saying, remember when the Fed sold encrypted devices to criminals and infiltrated large criminal gangs and then arrested them? I mean, this has so many red flags for me. And just off the back of what Ben was saying, that these transactions can be tracked. And so I'm not telling criminals what to do, and I am not for them, but this just feels like a little bit to me.
Let's also just note these aren't criminals per se. These are hackers. So we're not saying the people contacting these people will be criminals.
There are white hats on the dark web.
For sure. And it's interesting that you can actually access this platform using Tor. So when you're saying that they are going to where people are and kind of using their systems, it is interesting that they have, enabled this on Tor. Tor obviously being a system where you can't actually track a person's IP address through the system because it routes it through all of these different servers first. But David, I'll throw to you.
Yeah, I do think it's interesting that it's not clear whether this is Bitcoin or not. In my mind, the model would be, you get the white hats who are hanging out online to track the bad guys, which seems smart from a sort of geopolitical perspective, and would also mean it's possible that they're using Bitcoin for this if they're, saying these are not bad guys, they're just helping us out, they're contractors or something like that. but in the absence of real specifics, I just think this is, I love this because it's so validating for crypto in general. I mean, I'm assuming there's some Bitcoin involved here, and it's validating for Bitcoin because it's a perfect example of the fact that this is an adversarial system where you can actually engage with people who are, anonymous, untrustworthy. And, it also just shows that the system has grown to a point where everybody has to use it sometimes, or at least a lot more people. And so I think that, the nuances are interesting, but just at a high level, it's bullish, I guess. It's such a cliche, but it's bullish.
Yeah, and I love that it's just targeted surveillance, right? Targeted rather than mass surveillance, which we see the government doing so much of. It's nice to see them doing this for a change and actually trying to
it's actual intelligence work.
People.
They're doing actual intelligence work, and we have to.
Who would have thought?
Yeah, exactly.
Well, let's change track here, David. I'm going to throw to you for the next story. What's going on with the SEC?
Yeah, so the Wall Street Journal published some new conversations with Gary Gensler this morning. And essentially what Gensler pointed out was something that I think probably everybody in this room already knows, which is that decentralized finance projects are not always actually decentralized. And in fact, they usually are not. Anybody who has been paying attention for a while is familiar with the phrase decentralization theater. Which is, whether you're talking about a DeFi project or a crypto project more generally, you can do things like set up a foundation rather than running it as a company, or other things to kind of gesture towards the idea that nobody is in charge and therefore it can't be regulated. But really, once you get down to the nuts and bolts, that's not necessarily true. And Gensler, who I think, again, is demonstrating the fact that he understands these systems quite well, just made that point publicly and said that DeFi systems that aren't actually decentralized could be targeted for SEC regulation because they're facilitating the trade of securities. That's the takeaway. How they actually do that is up in the air, but it's a clear signal that projects need to get decentralized if they're not already.
For sure. And it's interesting. I mean, that's such a good point as well, because decentralization, we've talked about this a lot on the show before. It's a spectrum. It isn't this absolute state. And
it's a journey.
Projects fall all along. It's a journey. Projects fall all along that spectrum. And I honestly think that this is going to be a robust push towards making things more decentralized. Perhaps they can't just spout these words saying, we're decentralized. Also, we control all the keys and we have the ability to change the project, right. But it's decentralized. I think that these people are going to be called out on their, loose use of these terms, and the ones that are truly decentralized will survive. Because when Gensler is saying we're going to go after DeFi, he means we're going to go after DeFi that's not really decentralized, because I really don't see how he can actually go after things that are truly decentralized, And I think also absolutely. That's why these things are decentralizing, so we don't have this central focal point to shut down. But what I do worry about is there are lots of projects out there that are truly decentralized, but they have public figureheads who are, lead maintainers or, core devs. I think that we're going to see, as Gensler starts to crack down more and more, people just becoming anonymous. You're not going to have people putting their name to this work anymore. You're just going to have them flying under the radar. And that's going to be the future of all of this development. And I worry about those who didn't start off by anonymizing themselves and who are out there in the open and have created decentralized systems, because although they are decentralized, the government has no right to, target a software developer. It's freedom of speech. They can, write what they want. But I think the government is going to try, and I think it's going to make it really difficult for these people. But Will, I saw your hand go up there.
Yeah, just to add on to what you're saying there, quote at the bottom of that article from Gensler says, there's still a core group of folks that are not only writing the software like the open source software, but they often have governance and fees. There's some incentive structure for these promoters and sponsors in the middle of this. So that language is quite interesting. And I think it's necessary to note that decentralization in DeFi often just means censorship resistance at this point. It doesn't necessarily mean that everything is decentralized throughout it. So when we mean like censorship resistance, we mean this app lives on the Ethereum network as a smart contract, and you can't take it down without attacking the entire Ethereum network, which at this point is large enough, decentralized enough, where it would take a nation state attack to really pin that thing down, and that might still not even work. So the apps are truly censorship resistant in that sense. Doesn't mean they're decentralized though. Like even Uniswap is probably like the top app that people would be interested in targeting, because you could argue that it has some features of a securities exchange where they're tossing tokens back and forth and anyone can access it. And I feel like that's what Gensler would be interested in attacking, or possibly attacking would be something like that. Well, Uniswap team, often they basically live in Brooklyn, and people know that they live there. So I think like this story, it's pretty frustrating to see Gensler say that, especially after earlier in the year when he was coming into office. Everyone was very excited for this blockchain professor to take the reins, and now we're getting quotes like him might be going against DeFi in its early stages. Ben, really quick before we move to the next subject, though.
Yeah, no, for sure. I think that, Naomi, you kind of hit the nail on the head in terms of what the risks of this are. Like, I think going after open source technology is really troubling in its own right, particularly also just devs that might be contributing to projects and not necessarily have like an ownership stake or, be able to control every aspect of it. You're really like picking and choosing who you're going after. And that's really concerning. It gets back to the idea of these figureheads, right? These are people that benefit from the status that they sort of acquire as being spokespeople in some ways for these projects, even if they don't control it entirely. And I think that, we're going to see most likely like those individuals and those ones with like large followings and large voices in the crypto community be the ones that are potentially targeted. But I do think it's a really troubling precedent when you can just kind of pick some devs that you think are, transacting in securities and creating platforms for that, when they're really just doing some maintenance of part of a huge project that requires lots and lots of code. That opens a whole can of worms. But Jen, up to you.
Well, I know we have to tease quickly, but I just wanted to say I would love to hear the conversation between Gensler and Hester Peirce. I mean, I guess the safe harbor is not going to happen. I mean, that would solve a lot of the problems that we're talking about here today, is giving companies that time to get fully decentralized. But it doesn't sound like that's going to happen.
Yeah, that's such a good point, Jen. And let's just overhaul the SEC entirely, because it's an antiquated mission that they have that was created at a time that has no relevance to our current digital age. But we will talk about that another time, and we're going to take a quick break right now. Coming up after the break, we're going to focus in on some recent hacks, some follow-up from the Poly debacle, and some things going on in Japan. So stick around.
Of course, that's how we come back. Welcome back to The Hash, where we discuss the latest and greatest in crypto news and culture. And for my story today, we do have the latest, but maybe it's not so much of the greatest. The sort of nefarious at this point Poly hack continues its own ongoing saga here, with the hacker now holding millions of dollars hostage, even after the Poly Network team said that they paid him the bug bounty of about $500,000 and saw those funds move on chain. So this is an interesting situation for all the other reasons we've talked about, but it seems now that the hacker's holding back and says he might delay the return of all of the funds until potentially even next week. So, David, I'd be curious to get your initial thoughts on this, as this yarn just keeps unwinding, or some other metaphor about this than continuing to happen.
David
is muted. So actually, Will, talking to you.
Just muted.
No, sorry, back. I'm here.
Okay.
I'm here. So the whole situation is so wild and weird, because I've sort of been imposing a narrative on it where this hacker basically, I mean, we don't know for sure, but it appears quite likely they would not have been able to liquidate their holdings. And what seems to be happening is maybe they're trying to redeem some kind of reputation out of that. The other thesis, and this is strictly a conspiracy theory, but there have been people spreading the idea that Poly is somehow involved, and this is kind of a marketing stunt. But this now seems to, at least for the moment, put the lie to that, because they're not getting the money back. But this guy is playing such an interesting and kind of dangerous game where he's like, oh, I'm Mr. White Hat. I'm a good guy. I was just here to figure out what was going on with the network. But like every time there's a delay on the return, that which I think there was not that much reason to believe that in the first place, that erodes. And whoever this is, if it ever gets found out, like they have a path right now towards some kind of respectability. Maybe if they actually go through with this, they could potentially still be part of this community. But they're wearing that welcome mat thin every moment that this goes on. And it's really going to be interesting to figure out what the actual motivations, what the backroom processes were once this all unwinds. But Ben, you want to take it back?
I mean, yeah, I feel like anybody calling themselves Mr. White Hat, that's like an initial red flag. If you got to like say that, then it shows that your actions might be speaking clear, otherwise.
Polly called him that first. Polly
Fair.
kind of tried to honey him up a little bit by calling him that, and then he adopted it. But
yeah, it's a weird narrative game that's being played here too, right? Like there's the hack itself, and then there's all this extraneous stuff that's happening now in regards to it in terms of shaping. David, as you mentioned, like, oh no, I was doing this to be helpful, like all these other sorts of things. I just find it really, really troubling and very odd. And you know, I think that when you talk about like the reputational aspect in terms of even if this is ostensibly, I'm going to just say gray hat hacker at best. I think that, you know, when we first started talking about this hack itself, we saw people like kind of cheering him on in the comments. So I wonder how much, you know, maybe the reputation is not so much at stake, maybe he is returning stuff, but it seems like, you know, this person does have fans out there, even if they were, you know, in it for their own self-gain and saying like, hey, throw me a few pennies. But Naomi, what are your thoughts?
Yeah, I don't know. I'm going to give this person the benefit of the doubt. So they, late yesterday, they signed a message. They said, please be patient. Just signed transactions of USDC and DAI a few hours ago. I can't imagine that what they're doing is easy, right? I can't imagine that trying to send these funds around and remain anonymous is a simple task. That, I mean, I think about like, you know, some of the things that my friends go through when they're sending transactions just because they're interested in privacy of their own transactions. They're not even like, they're not dealing with stolen funds or anything like that. And it's like, it's rigorous. Having privacy is difficult. And so I can't imagine that this is an easy thing that's going to happen quickly. So I'm going to give them the benefit of the doubt. At the end of the day, like we can make as many guesses as we can about their motivation and about whether they're nefarious or whatever, but all we can really judge are their actions at the end of it. So if they are returning the funds, great, you know, white hat hacker. Maybe there are some that are more grounded in like a good-natured philosophy of doing good work. But this guy, I mean, whether he was coaxed into it, whether he was honeyed up and encouraged by the community, and this wasn't his initial intent, at the end of the day, you know, let's judge him by his actions. So I'm interested to see what happens here. I don't think that he's going to run away with the funds. That's just my guess, but we don't know. We got to wait and see. But let's change track because there's another hack that just happened. Jen, what's going on in Japan?
There sure is. So Japan's Liquid Global Exchange is the latest hacking victim. So they tweeted this morning that warm wallets were compromised and deposits and withdrawals had been suspended. The total amount is still to be determined, but the value of crypto stolen could be up to $90 million. So another massive hack. I know it's not the 600 million that we were just talking about, but 90 is huge. Will, I know that you very closely follow these hacks. You just put your hand up. What's your takeaway from this?
I'm on top of all these hacks. Maybe even
you are on
them.
top of all the hacks. We're just going to change your name.
Mr. White Hat.
Yeah, Will and Mr. White Hat. Now, this is how
Mr.
we're
White
going to
Hat.
start.
I'll grab one on the show. No, it's interesting to see that this is a regulated exchange, and exchanges to operate in Japan have to go through regulation processes with the government there in order to operate at all. And Coinbase actually is just spinning up its own Japanese exchange right now in a partnership with a regulated exchange in Japan. So if you're looking at hacks, $90 million, and it has a stamp of approval of a government agency, that leads you to a few conclusions. The biggest one being that doesn't matter. Government doesn't know what's going on with these things. Like they're very complex. Even like a team like Poly Network, which I'm assuming can probably code Solidity better than all five of us on the show, doesn't matter. They got hacked too. So we're still in the wild west of exchanges. 5, 6, 7 years since Mt. Gox, same things are happening where people are losing money because they don't know how to operate exchanges well. I think that kind of points to the other side of the issue where you have exchanges like Coinbase that have not been hacked yet, and that's why they do so well. That's why they're able to make so much money. You haven't heard of Coinbase doesn't answer the phone very well. It doesn't pick up tickets very well and do the customer service extremely well, but they don't lose your funds. And I think that's why you see some exchanges do better than others. But I want to throw this over to Ben and get your insights on it, or Naomi, or David, anyone.
Naomi, take it away.
Yeah, I'm just going to say, like, I think that's such a great point, Will, about like you have this regulatory stamp of approval and people think, oh, well, we're safe because the government approves of this. And then things like this happen. I mean, it reminds me of like seatbelt laws, right? Because if like the early days when seatbelts were first being figured out and they figured out this, let's pull it from the top and it'll connect in this triangle. And the government's like, right, that's the one we're going to approve. That's, a regulatory stamp of approval. And what it did was it took away the incentive from companies to innovate on seatbelts. There are all kinds of seatbelts out there that are way safer than this awful triangle system. But companies are disincentivized to innovate because if they do something that is outside of what the government's already stamped with its approval, then they're culpable. They're liable if someone has an accident and they're hurt. So there's no incentive at all for them to innovate and do things beyond what the government has said. Like in a case like this, it's the same principle behind it. If the government puts its stamp of approval on it, the exchange, they're not going to do things outside the practices of what the government says is the right thing. They're going to stick to what the government wants, right? Because if they don't and something like this happens, then they're liable. But if they stick to what the government says, something like this happens, the government at least can say, well, they were abiding by the law, it isn't really their fault. And so it really just takes out innovation from the mix, which is a really sad state of affairs. And sometimes, I think we're better off without that government stamp of approval because it really just gives us a false sense of security. You hit the nail on the head where you said that the government doesn't know what's going on. They have no idea how to secure these things. They don't know what they're talking about. So it's laughable that they're actually saying, oh, this has our stamp of approval. It's like, thanks. Like, grandma, I'm sure that you really understand what's going on here. No offense, my grandma is great, but I wouldn't trust her to, figure out security standards for an exchange. But I'll throw this to you, David. What are your thoughts?
I guess my only thought is just like my reaction to something like this is, $90 million. I have no reaction. I'm blasé about $90 million disappearing.
That's a lot of
and that
money,
actually
David.
Makes me, yeah, exactly. That's
Not
what I'm saying.
It's
worrying that this, there's just this steady drumbeat. It keeps happening to the point where each one is less and less interesting in its own. I don't know what the implication there is, but it definitely is the situation. These just keep happening. Jen, you've got some last thoughts?
Yeah, so I actually wanted to ask you a question, Will. We talk about exchanges that are regulated being hackable because the government doesn't really actually know what's going on. So for what does that mean? Is the risk the same no matter what exchange we use?
Well, I mean, apparently this exchange didn't know what it was doing either because they were messing around with their hot and cold wallets, which is like standard practice 101 is really don't keep a lot of funds in your hot wallet. You got to put them in your cold wallet storage, and you've got to have cold wallets for your cold wallets. Like you just got to protect your funds, and when you're moving them off to other people, that's when you use your hot wallet. You don't keep a lot of funds on there. But just to answer your point shortly before giving to Ben, like anyone can be hacked. These are very new systems. They're extremely complex, and this is part of the learning process.
Yeah, and I want to say, like, a colleague of mine was poking around with the blog post that the exchange published, and using Google Translate, it seemed the company was saying that this was a result of a hack of an MPC wallet, a multi-party computation wallet, which are inherently incredibly secure. And so, again, with the weirdness and not really understanding, I reached out to a few researchers, and they kind of came back and said, we really don't think, they need more data, but they don't think this is a result of an MPC wallet being hacked. This is something else to do possibly with inputs and stuff. So even it seems on the company side, there may be a little bit of confusion about exactly what is going on and what the source of this is. So that was really interesting to me as we look at MPC being a major, venue of storage and security within the industry and what the implications could be there. But that was, I don't know, my takeaway. But Jen, I'm tossing back to you for the last story of the day.
I think it's Will's story. I just did my story, Ben.
You're tossing it to me. So, okay, same kind of idea here. Actually, not at all. We're talking about Coinbase and Palantir, and they're both grabbing funds and stuffing them in their bank account for apparently to like protect themselves against a bear market or a downturn in financial markets. So we'll start off with Coinbase. Apparently, they are stockpiling $4.4 billion in cash, according to a report from the Wall Street Journal. Then we also have Palantir, which is buying gold bars. And I think from this Bloomberg article, they said they have 100-ounce gold bars secure in the northeastern part of the U.S. that they can access whenever they want to. They also have a lot of other risk assets on their books, including possibly Bitcoin, though that is not yet confirmed. So what's the reason for this? I don't know. Bear market makes sense. If you see Bitcoin draw down in the past, like 85%, it might scare you a few times to put some cash reserves in, especially if you just went public and you have the ability to put some capital away. For Palantir, very libertarian focused organization, very tech heavy, and it recently actually just moved out of San Francisco to Denver, and they're just like a different company. Like they're a tech company, but they operate in a very weird world where they have like government interactions, but also a tech company, and now they're investing in gold to kind of protect against, I guess, the downside of the dollar, or perhaps just like risk in financial markets across the globe. But David, I want to get your thoughts on that, especially with Palantir. What was your thinking when you saw these two headlines?
Well, my first thought is actually about the Coinbase situation. And the thing that strikes me there is if you got $4.4 billion and you're sort of trying to prepare for a market cycle, another thing that you could do with that money is actually diversify the business. I mean, you can build a big new business with $4 billion that might be less exposed to crypto market fluctuations or something like that. Now, that being said, Coinbase would not be alone here. Over the last decade or so, tech companies in particular have built up gigantic cash reserves. Apple notoriously has like tens of billions of dollars just sitting in the bank that it has not used to grow its own business. And so they're not unique. But it is notable that that money is not being used to diversify, which, you know, it's a toss-up whether you're a stockholder and you would want them to have the cash as insurance or use it to grow the business. I think both are good arguments, but it is notable that they're not doing that. Palantir, I don't know. It's weird to me. I don't think I'm the right person to comment on it. I don't think, I mean, gold is even, I think, less interesting than cash as a business proposition. If you're, so I don't have a lot to say about that, though, I guess. So I'll maybe Naomi would have some thoughts about the gold story.
Yeah, I mean, the gold doesn't surprise me at all. That seems completely in line with Palantir and Peter Thiel. And I mean, we're undergoing such a monumental transition in the American economy and the global economy right now. We're seeing, you know, always rising inflation, and then inflation predictions keep outpacing, keep under valuing the actual rate of inflation. Lots of people are worried. The fact that we have people who are, you know, I mean, Peter Thiel is very economically literate. He's looking at this economy. He's spoken about it, you know, at length. It's no surprise that he's saying, okay, we need to stockpile. We need to figure out how to safeguard ourselves and protect the business if there is economic downturn. I mean, the worst thing that companies could be doing right now is having all of their money in cash, because they're just losing such a monumental amount. These, you know, companies, they need to be lending it out and getting like a higher high interest return, or they need to be putting it into assets that aren't just, you know, having the value inflated away. So it seems like it's a smart play on both the sides. I mean, I like that Coinbase is stockpiling and protecting consumers. If we're talking about the difference between different exchanges and who's at risk and whatnot, well, I'd be looking at the companies that are safeguarding themselves, creating these stockpiles.
That's a great point.
I like Binance for the same reason, that they set up their own insurance fund. They have this SAFU fund. You haven't had customers out of pocket at all. They're the exchanges I would look to if you're a beginner getting into the space. And a lot of people hate all centralized exchanges, but, you know, I think if you are going to go that route, then definitely look at the ones that are being careful in this economic climate. But Jen, I'll throw to you for your thoughts.
Well, I'm back. Thank you for waiting for me, guys. So I mean, when I read these stories, I just thought, like, I'm not ready for another Black Swan event. And to your point, Naomi, I
Black Swan events don't care what you're ready for, Jen. It's coming.
Processing the last one. And to your point, I think we should be looking to exchanges and companies that are prepared for these. I think we've seen so many Black Swan events in our lifetime that the companies who are not preparing for them are, I don't know what they're doing, but yeah, I don't know. I have nothing else to add past that. I'm just not ready.
I think it's funny to see companies like Coinbase that traffic primarily in crypto and get, you know, most all of their money from like trading fees and stuff like that, kind of divesting and storing money in fiat in a variety of ways. I think it really points at some of, you know, less than the Palantir story, but really points to the fact of like a lack of practicality for any one maximalist worldview right now. And they're like, yeah, we can absolutely, be pro crypto, but we still got to hold some cash here, like in the event of a bear market or the onslaught of that. As for the Palantir one, that one just makes no sense to me. I don't really understand unless we're looking at it as, like a teal-back company, like casting their fingers to the economic winds and trying to predict what will happen. But that one just was bizarre.
All right, well, let's wrap it up there on that bizarre note. Thanks, everyone, for tuning into The Hash. We are back tomorrow at 12, as we are here every day of the work week. But stick around, because if you want to learn more about Bitcoin stuff, find out what's going on in All About Bitcoin, 3 p.m. with Christine Lee today. And then tomorrow, we've got First Mover at 9 a.m. But everyone, thank you for being here. Thank you for watching. Have a wonderful day, and we'll see you tomorrow.
See ya.